I do in fact make money a good chunk of the time, even when I'm wrong. I understand statements like these can incite violence. All the riots that were happening in the United States over the last 4 years were as a direct result of me making money trading, even when I'm wrong. Now listen, here's the thing. This takes context, and it takes nuance, and it takes experience. Today, I'm just going to give you a model showing you this in TradingView replay mode. And if you want to see this happen every single day, follow my free Telegram channel. There's 60,000 members in it. It's completely free. I've run it for 6 years. You can join at the first link in the description, or I'll probably put it in the pinned comment. You can see there all the results and analysis on a daily basis. But I'm going to give you a proof of concept here in this video, something that you can take right now to go out and test for yourself as soon as you're done watching this video. With that being said, let's go ahead and dive into it. I'm going to also show you how ridiculous this is, because for a portion of this, we're just literally going to use a random number generator to show you how I profit a good chunk of the time, even if I'm completely wrong about whatever the outcome is. So the random number generator generated the number 2. So we're going to use the second pair on the watch list. This is Euro AUD. Now, a great part about the TradingView replay mode is now they have something where you can just go back in time to a random bar. So I'm going to show you that. We just go click this replay mode here in TradingView. Then we go where it says select bar. You can click the drop down menu and just click random bar, and boom, we are now in May of 2022. Now here's what we're going to do. We're going to use a random number generator to tell us when to buy and sell, and I'm going to step in every now and then and use my discretion, my lovely experience, to help make trading decisions. The point of this is to show you that as long as you're sizing your positions appropriately, you can in fact make money even if you're wrong 1, 2, 3, 4, 5 times or more in a row. You can still come out on top. A lot of people will call this a hybrid of a dollar cost averaging or grid recovery or martingale approach. The way I do it requires context, and that's what you're learning here in this video. So come on, let's go get started. Come on, let's go. Come on, let's go right to the charts. So the random number generator will do a number between 1 and 2. 1 will mean buy, 2 will mean sell. So we're going to start with the number 2, which is a sell. So we're going to sell. What we're going to do is simulate that we have a let's do a $100,000 account. My account right now is around $200,000. It's been a bad trading month. I started it at $300,000 and it's now down to $200,000. Very bad trading month. I've lost 100 grand. But so I'm just going to do a smaller amount than my actual account. I'm just going to do, we'll say 100K. You can customize this to your own liking. If I do one standard lot on a $100,000 account, you can simulate doing a 0.1 lot on a $10,000 account. If 10,000 is too much, it's no big deal. You simulate trading a 0.01 lot, also known as a micro lot, on a $1,000 account. It all functions the same way. And again, this is just to help you get experience so that way you can start seeing things happen over and over again. And then as you get the experience, you don't have to trade this degenerate way. You'll have the experience and the discretion and the intuition to help you make trading decisions as a result of that experience. And you won't have to rely on a random number generator like me. Let's go ahead and get started here. So we're going to sell since it's the number 2. Number 1 is buy, number 2 is sell. We're going to sell with one standard lot, and again, remember we have 100,000 in the account. Let's just set a profit target right here at the previous low, and we'll let things play out. So this is ranging right now. It's going sideways. We're here on the 15-minute chart, just so that way we're not sitting in trades for 6 to 12 months at a time. I myself use the daily chart and 4-hour chart in practice. You'll see in the free Telegram channel. But 15-minute and 1 hour is good for modeling just because it gives you a lot of trading opportunities and things like that. So price is still going kind of sideways, kind of ranging. We've been in this trade here for a couple days, about a week, and then it finally goes and hits the target. So now price is at a support zone. So you might be thinking to yourself, now's a good time to buy, right? I mean, it is, after all, at support. Shouldn't we buy? Let's be super degenerate and let's just go ask the random number generator what to do. Just to prove to you. Doesn't matter. Random number generator says number 2, which is a sell. We're going to sell at support, guys. Ready? So we're going to sell at support. Where should we put a profit target? Wherever. It does not matter. Just put it wherever you want whenever you're testing this. I'm just going to put it a little bit lower. So that way if price goes and makes a lower low, it'll hit the target and then, maybe it'll pull back. So if price goes up, here's what we'll do. If price can get up here to these highs, we will enter another sell. This is called dollar cost averaging. This is not called martingale trading. Martingale trading means that whenever you're wrong about a trading idea, you successively make incrementally bigger bets that essentially double the position sizing. That means we would be using 1 standard lot and then 2 standard lots and then 4 and then 8 and then 16. Martingale is a terrible way to trade. However, a hybrid, inserting a few concepts of martingale, but in the context of a trading approach where the first subsequent position sizes or bets are small enough, martingale actually works really well, provided it's done in a specific context. Meaning, let's say you start off with 1 standard lot, right? If we get up into a huge drawdown here, which hopefully that happens, right? It would be very unfortunate if we just had a huge win streak. When we get into successive drawdowns, going a little bit higher on the position sizing after a couple trades that do not revert into profit is actually a very good idea, because provided your position sizing is appropriate, it means that successive position sizes that are bigger, the market is already stretched really far against you. It's likely to have a reversion at some point. Then you can get out in profit if those position sizes are just slightly bigger. So come on, let's go back to the charts. Come on, let's go. Let's get back into it. So we're here in the charts. We're going to see if it can go up to the resistance zone. A little bit more. So now we're going to add to the losing trade. A lot of people say this is a horrible idea. If you're using a 0.01 standard lot on a $1,000 account, one of the best things you can do is add to losing trades, because the further price moves in one direction, the more likely it is to eventually have a reversion. I've built my current trading approach around this. It's not exactly identical to this. Again, this is just to give you a proof of concept to help your brain get trained and learn when would be good times to enter and when would not be good times to enter. It just allows you to accumulate the experience way more quickly. Whenever I do this, I wait for markets to go really far in one direction and then I get in. Now, over the past few months, my position sizing has been so heavy and I've had such low leverage on a new broker I'm using that I have not had a profitable month last month, and the month before that was break even. Very, very bad. So unfortunately, I'm backed into a room with guns pointed at me. I have to lower my position sizing to make this work because I don't have high leverage anymore. But with that said, you're doing this with very small position sizing on an account that you're willing to blow the whole account. If you have $100,000 to trade with, let me be more realistic here. If you have $1,000 to trade with, but you don't want to lose it all, just deposit into the account whatever you're comfortable losing. It's okay if the account blows, as long as that money is a small percentage of your total trading capital, and the money in that account is money that you've already kissed goodbye. You're effectively risking the entire account per trade, because anything can happen if you're trading this way. And again, this is not a long-term solution. This is just to help you develop experience. I'm trying to give as many caveats as I can, because I oftentimes see a lot of pushback in the comments of my YouTube videos from people who are not profitable, trying to give advice and suggestions to people who are profitable. Whenever you read the comments of this video, remember 90% of people do not make money trading. They in fact lose money. 9 out of every 10 comments you read is coming from a person who probably doesn't need to be giving their advice or opinions. I'm just saying this because there's a lot of misinformation out there. Now let's get into it. We've just added to our sell. Let's see what happens here. Price makes a new high. Let's see where the next spot it is price could bounce. Perhaps somewhere around this resistance zone. It's very boring sometimes. It's extremely boring. Price is still ranging. It's kind of going sideways. A lot of people will say, Nick, why don't you close the sell and then you buy at the support because it's at support? The problem is nobody knows what's going to happen. Support bounces half the time, resistance bounces half the time. The other half the time, support resistance doesn't bounce and price just ends up going sideways, or it ends up just breaking through the zone. Support and resistance without the use of discretion has about a 50% win rate. So unfortunately, guys, this trade has gone into profit. Yeah, we'll see if it can make a new low. Okay, so it's made a new low here. I'm going to go ahead and just elect to close the trade here. It's gone into a nice little profit. Just going to close the trade. We're going to get out here, call it a day. Again, keep in mind, this is without doing any mental gymnastics. This is literally just aping into trades with a random number generator with one standard lot on a $100,000 account on Euro AUD on the 15-minute chart. This takes zero brain power, maybe 1% brain power, because you have to go and click the number in the random number generator. But it takes, what I'm essentially saying here is that it takes almost no work. So this was a nice winning trade. So I would like to buy here, but no, that would be too simple. We can't use intuition, can't use experience. You have no clue what's going to happen. Even if you have an 80 to 90% success rate and you're right that time, you don't know what's going to happen every time. Just to prove this works, we're going to go again to the random number generator. Instead of buying, we're going to generate a random number, and it got 2 again, 3 times in a row. The random number generator tells us to sell, and the random number generator has made $3,600 in simulated profits. So let's just listen to the random number generator. We're going to sell again with one standard lot, and we'll put a take profit just below. Then we'll watch what happens. There will be people saying, it's in a downtrend, so you got to sell, Nick, so that's why it's going to work. There's going to be people saying, no, Nick, it's overextended to the downside, so now it's time to buy because you're going to have a move back up. None of it matters. Nobody knows what's going to happen. Price just goes up or down. I am not interested in the narrative. I am not interested in the reasons. I am not interested in people's mental gymnastics. I am not interested in fundamental news events, and I am certainly not interested in 90% of people's statements, because 90% of people do in fact lose money. I am interested in what in fact works, and very few things work much better than literally just aping into trades using a random number generator, provided the position size is small enough. That is the only reason this works. So that might have been a good area to add up there, but let's just say we missed it. You know, we missed the trade. We were asleep. You know, it happened overnight during the other session. We were asleep, so we missed the trade. If it goes back up higher, then we'll add to it. The drawdown is 500, 1,000, maybe even 2,000 on the spike up there. All right, let's go ahead and add right here, right? We're in negative 1,600. Let's just go ahead and add. We'll also adjust the target. We'll put the target maybe like right there. This will be a little bit more reasonable. We're accounting for the context. Well, remember, when you do this, when you go out and test this after this video, you can move the target wherever the hell you want. It does not matter. Just set the target at whatever you think is a good spot. If it's 500 pips lower, it's probably going to be less likely to hit. If it's 10 pips away, it'd be really likely to hit, but you're probably leaving money on the table. So you put it in a place where you think is, you know, where you're comfortable with. We want you to be comfortable. Now, come on, let's get back on the charts. Let's go right back to the charts here. Perfect. So we have the market starting to run away from us. So the next set of resistance zones is like up here. Let's see if price can push deep into this zone up here. We will add a third position. Now look, we're in $4,600 of drawdown. So a lot of people will be like, we've only made $3,600, so we're floating in more drawdown right now than the money we've even made over the course of the past however long it's been, maybe 2 weeks of data, whatever it happens to be. This is where it comes to be very important that you're using small sizing on a relatively larger account balance. For example, I'm using one standard lot on a $100,000 account. Equivalent would be a 0.01 lot on a $1,000 account. At any time, any given time, you could be in a 10, 20, 30, 40, 50% drawdown. But again, this is why depositing into the account something you're comfortable blowing is perfectly acceptable. Because if you have 10,000 to trade with, but you're only willing to risk 1,000, just put $1,000 in the account and use a 0.01. Most of the time, you'll be really unlikely to blow it. And every now and then, the worst case imaginable will happen. You will blow it. But provided you're able to double the account a good percentage of the time, even just grow it 50%, right? If you're able to grow the account and double it any more than half the time, it is a profitable approach. And this literally requires no mental effort and skill. When you start doing what I'm doing, which is like using stop losses, kind of picking the entries and exits using your discretion and intuition, and then using heavy sizes, you'll have big profitable months when you're on a win streak, and you'll have like bad losing months like me this past month when you're on a losing streak. I've lost over 100 grand trading Forex the past month. It's just a part of the game. With big risk comes big reward, and provided that the risk structure is all okay, you're gonna have a couple down months and break even months per year, but your winning profitable months should occur more than your losing months, and they should just be more in terms of dollar amount profit. So we've just added to this. We're in a $4,000 drawdown, and I'd love to add again at the next resistance. So I hope it goes into more drawdown. That way we can properly illustrate this concept of just, aping into it. So now prices started to go down, and we have a decision to make. We can choose to control risk and just liquidate the position and break even, or we can choose to get out of this position here at another price, like hold it a little bit longer. The more conservative decision would be to close the position right now. But just to show you how much of an ape I am on the inside, I'm actually a chimpanzee. I'm just dressed like a human right now. To show you how much of a degenerate day trading gambling ape I am, I'm gonna stay in this trade. Now, we're gonna give a little bit of slack here. We're gonna move the target just a little bit closer. That way we're not, our original target was past the lows. We're gonna move it a little bit closer, like up to here. That way, we'll still make a little bit of money, but it's not like we're trying to be a hero here. I think this is gonna have a reversion back to the upside, and I hope it happens. That way I can show you guys how painful the drawdowns can get. But for now, we'll keep it where it's at. We're gonna keep it right here, moved it a little bit closer. That hits the profit target. We've now grown the account $7,000, technically Australian dollars. And this is when we were wrong. How many times wrong were we? We sold. Where did we sell? Yeah, we sold here. We sold a second time, then we sold a third time. We were wrong 2 times in a row, right? That first one we were wrong, second one we were wrong. The third one was right, we went into profit. And because we sized appropriately, the drawdown was what? $4,000 or $5,000? That's 5% of the account, plus we had already grown it, so it's a little bit more than that. So it is what it is. We're gonna do one more trade, right? Aping in. Now, I think buying will be a better idea because we've already had a lot of stretch to the downside. So I just feel like buying will be a better idea. But no, we're gonna go to the random number generator. This is the random number generator's last chance to give us a buying opportunity. So far it's been right. Even though it was wrong a couple times, we somehow still made money, which doesn't make sense. You shouldn't be able to make money trading even when you're wrong. But I'm just proving it that yes, you can. You can, as long as your position sizing is small enough. And you can go and test this right after this video. You're about to be free. Class is almost out of session, but come on. We're gonna go get right back into the charts. Come on, let's go. Come on. We're gonna do generate. Finally, finally we get a buy. All right, now we're gonna see how right I am, because I thought buying would be a good idea in the first place. So we buy. I'm gonna set a profit target up here. All right, so the buy worked out. Price spiked up. It was $1,000. So we had an $8,000 profit just for one more. That was too easy. It can't work. This is a scam. It's way too easy, guys. I'm just gonna do one more. I know we said we're only gonna do the last one. Let's do one more. I want to see if we can get ourselves into a pickle here. Random number generator. It's number 1, so we're gonna buy again. Set a profit target like up here. Okay, unfortunately, I'm very sorry. We have another winning trade. We've grown the account almost 10,000 Australian dollars, so we've grown the account 10%. In how long? How long has this been? What is going on here, guys? We were 17th of May down to 17th of June. This has been 1 month. We've grown the account 10%, and with the max drawdown of around $5,000, so about 5% drawdown. Now, As you keep doing this, you will find that you get into heavier and heavier drawdowns. You know, in fact, come on, let's go back to the charts. We do one more. This is the second time we're doing one more. We're gonna do one, we're gonna buy. And this is buying after it's already had to move up. I pray that this goes into drawdown. We need some drawdown here. I don't have any fun unless there's drawdown. You shouldn't have any fun unless there's drawdown. You need to be a masochist when you're trading. Okay. Set a target, the little resistance zone thing up here or further up. Where would be a good place to add? Let's just use that low. Okay, we're going into drawdown. The trade's going good. Going into some drawdown. This is good. This is, oh, no, it's going into profit. Damn it, it hit the profit target. So, excuse me, guys, we've made $11,000. Guys, I've tried the last 3 trades to get a losing trade to just go. This just goes to show, using a random number generator and very small position sizing on a relatively large account balance tends to work very well. And it works very well doing almost nothing, right? You just buy or sell, and then obviously, ideally, you wouldn't use a random number generator. You would think, oh, this has gone down really far. Let me buy because it might have a bounce up at some point soon. And then if you buy, even if you're early, even if you're wrong and it goes against you, if you wait for it to stretch far against you, then you add another position, same position size. In this case, I used 1 lot and series of 1 lot trades. Goes against you more, you add 1 lot. You will get into drawdown sometimes, 10, 20, 30, 40, 50%. But most of the time, price eventually has a reversion somewhere, provided your entries are all spaced out far enough and you're not using like 1 lot and then 2 lots and then 4 lots. That you're going to blow your account very quickly using martingale. But if you're using this kind of like grid recovery trading and like DCA, dollar cost averaging as it goes against you, and you're using like linear DCA, you're not using exponential. So like linear is just using 1 lot, 1 lot, 1 lot, 1 lot. And then maybe if it goes really far against you, you start using like 1.5 lots, 1.5 lots, or maybe 2 lots, 2 lots, 2 lots. You can do that, and you'll get into big drawdowns, but provided that the initial bet is small enough, then it works fine. It's no big deal. This is just to illustrate the proof of concept that you can be completely wrong and still make money. I've proven it here. I tried to be wrong 3 times in a row. I'm sorry, guys. Unfortunately, we made demo money here in the simulation, TradingView replay backtest thing. Remember that most people lose money. And remember that if you listen to everything I say, and even if you try this for years, you will probably still lose money. It's very sad. It's very sad, folks. However, there will be a percentage of you, roughly 5 to 10% statistically speaking, in my humble opinion, that will in fact make money trading. And then you can start to develop your edge, your intuition, your discretion, your discernment of price action, your subjective opinions, based on getting the experience doing stuff like this, seeing what tends to happen after you just enter buys and sells randomly, understanding that most of the things you tell yourself about fundamental analysis, predicting which way the price will go, is bullcrap. Using technical analysis and trend lines and Fibonacci and even support and resistance, it's bullcrap. Like, it's only going to bounce half the time. The thing that will make you profitable is your intuition, and you only get that through experience. And I've just given you a perfect way for you to accumulate that experience by simply going and entering random buys and sells with very reasonable profit targets, simply adding to the losing trades in a structured way in which the risk is defined, using a starting balance that you're completely comfortable blowing. If you have 50K to trade with, you're only comfortable risking 5K, then just put 5K into an account and use maybe like a 0.05 lot size. You can do it proportionate kind of to how I did here in the video. You will blow accounts doing this, but for the most part, if you're doing this, you've got some experience and you kind of see what works and what doesn't, and you're using proper position sizing, you should be able to grow accounts a little bit more than 50% of the time. Let's say 60 or 70% of the time. Let's say you do it like even just 60% of the time, right? Just barely more than halfway. If you start 10 trading accounts and 6 of them grow to the profit target and 4 of them blow, you came out on top. You came out profitable. Even if you just blow half of them and then grow half of them, you double, like you said. When it means you grow, it just means you double half of them. You could double half of them, then you blow half of them, you just break even. Not that big of a deal. You can start multiple accounts. You can start like 4 accounts at the same time, right? And if you grow 3 of them and blow 1 of them, well, that's a profitable trading approach, right? And even if you just grow 2 and blow 2, right? Just statistical average, like you suck at trading, you're still breaking even. And breaking even is a hell of a lot better than losing money. If you can just break even trading, you are ahead of 90% of traders. And you are ahead of 90% of the people in the comment section of this video, because 90% of people are in fact losing money. I make no representations or guarantees that anything will work for you. Trading is risky and most people lose money. Make sure that you consult a licensed financial services provider before placing trades in any financial market, and make sure that you understand the risks involved. With that said, if you would like to see my analysis live every day, I post it in my free Telegram channel along with a lot of other little cool insights and audio messages in there, and I have done that for 6 years. Click the link in the description, or you can click the first pinned comment, and you can follow my Telegram channel. Hope to see you in there, my friend. Happy trading. If you like this video, be sure to do whatever the hell you want. See you in the next one. Bye.